What is up, you guys? It's Kurt here. In this video we're going to talk about whether you should be buying or renting a home and how you can decide for yourself what is the best option for your circumstances. I'm going to give you 5 qualifiers and tools and guidelines how to address those qualifiers as you're trying to make up your mind which way should you go, renting or buying. And I also want to give you a specific example. We're going to go over a specific example together of what it costs to buy a house, and I'm going to reveal to you some of the hidden considerations that you may not be aware of as a first-time buyer. So stay tuned until the end of the video, because I'm going to give you also 3 tips on how to manage your savings as you're prepping up for your down payment for the house or apartment that you want to buy. So stay tuned. Welcome to Investing with Kurt. This is a channel dedicated to investing, personal finance, and financial independence. So if you're new here, make sure to subscribe, hit the bell notification icon so you're notified every time I post a video like this one. So let's get on with it. Should you be buying or renting? I believe that a big influence on how you answer this question is the way that you were brought up. I can tell you that when I was growing up in my family, I was always told that I should be buying a place of my own, and that should be my ultimate goal in life. In fact, in my extended family, it was so bad that actually you were considered a failure unless you owned your own place. Now, fast forward a few years, I was fortunate enough to live in quite a few places around the world, so I got exposed to different kind of thinking, different mentality, and I've got to hear different opinions on what it makes sense to rent or to buy. So I want to share that with you today and give you some food for thought. All the time I was told by my parents that paying rent is like throwing money away. They told me that it's actually you're paying your landlord's mortgage, so it doesn't make any sense. And I kept wondering, is it really true? Is it always better to own a place? And to really answer that question, we need to look at several parameters, because it's not the same answer for everybody. It depends on how old you are or what stage in life you're in. It depends also if you're financially stable, if you can afford a house or a small apartment. It also depends on where you live, because depending on your area, renting or buying might be cheaper. Now, those are some obvious considerations, but I want to dive in and dig a little bit deeper by going through 5 key qualifiers that is going to help you make that decision for your specific circumstances. So the first qualifier that I'd like to suggest to you, whether you should be buying or renting, is first of all, answer the question, can you actually afford to buy a place? Now, many people struggle with answering that question honestly and objectively just because they don't know if they're ready or not. But they have some money saved up, they've put aside some savings from their paychecks, and they believe, okay, maybe I should be buying a place already. But to really answer that question, if you're ready and you can afford a place, I'd like to offer a few principles and guidelines that you can follow to answer that question for yourself. So let's start off with number 1. And I call those also prerequisites in a way. So if you fulfill those prerequisites, then ultimately you're ready to buy a place. So prerequisite 1, or rule number 1, let's call it. That is, you should have an emergency fund of 3 to 6 months of living expenses. If you're single, that should be sufficient. If you're married with children, you may actually think about 6 to 9 months worth of expenses. Rule number 2, you should continue to save for retirement. Now, just because you want to buy a house and that's going to consume the most of your financial income, it does not actually mean that you should stop saving for retirement. As we know, a good rule of thumb is that you should be saving anywhere between 10, 15 to 20% of your paychecks. You should put those aside for retirement. But if you want to buy a house and that's going to be financially difficult, you may opt in to back that down to about 10%, but you should at no means stop saving for retirement. Rule number 3 is that you should have at least saved 20% as a down payment for the place that you want to buy. And that's really a good place to start. You can save a little bit more if you can, but having less than 20% as a down payment, it's going to cost you a lot more in the long term, because that would mean that you need to have an additional insurance on the loan that you're taking from the bank. Your home should cost no more than 20-30% of your net worth. Now, if you don't know what your net worth is, or it's hard for you to calculate that, I can simplify that rule by basically, if you have a mortgage, you don't want the mortgage to be more than 1/4 of your take-home pay. So let's say, to make the math easy, you make $4,000 a month. So your mortgage should not be more than 25% of your take-home pay. So you should not be more than $1,000. Now, all of those rules are important and they're best practices. I didn't come up with those, which are going to help you and set you on the path of being financially stable, because you don't want the fact that you want to buy a place to be a financial strain. You don't want it to cause any financial stress in your family, and God forbid to cause anything worse. And if you can check all of those 4 rules, then you can say that you can afford to buy a place of your own. Qualifier number 2, is it cheaper to rent or to buy? So if we can answer that question, that will probably help us answer the bigger question, which is, should we be renting or should we be buying? But I want to warn you that on the surface, oftentimes you will find that rent can be a little bit more expensive than a mortgage for a comparable house, but that does not mean that renting is more expensive. And this is where most people have a hard time making a call of what is better to rent or to buy. And this is what I want to do in this part of the video. We're going to dive into the numbers because that's the only way to really understand what is cheaper. And we're going to take a look at a use case here of buying a $250,000 house. We're going to look at what it actually costs in the long run, and we also want to examine what are the opportunity costs. What are we actually giving in as far as our financial stability and financial independence in the long run. So let's dive into the numbers and let's see what it comes out to. So first of all, the down payment of a house which is $250,000 in value is going to be $50,000. So you need to have saved that in cash. And then if you don't have 20% as a down payment, then what I mentioned earlier is you will have to pay an additional what's called a private mortgage insurance, or PMI, and that would be on top of those interest rates that you're paying for the house. Now, closing costs, those are also very important, and usually those are anywhere between 2 to 5%. And on this kind of a house, that amounts to about $5,000 to $12,000 or so. The next thing that we need to worry about is the mortgage payment. So with the mortgage payment, if we put $50,000 in cash as a down payment, then what's left is the $200,000, which is the principal. And on that principal, we're going to pay interest. And interest, it really depends. It varies with time, but right now it's maybe about 3.5, 4%, maybe 5%, or a little bit higher, depending again on where you live. What you also have for the house is property tax. So every year you're going to have to pay property tax. You also have insurance for the house, right? Homeowners insurance. If we add all those numbers, then what it comes down to is a total monthly payment of about $1,300. Now let's assume that you took a 30-year mortgage. So for those 30 years, on the $200,000 loan that you took from the bank to pay for the house, what you will be paying is the principal, $200,000. The interest that you would have paid in 30 years is $135,000. Property taxes, $90,000. Insurance, $45,000. And that amounts to the total amount for the house would be $470,000. All right, and then what is the alternative? So the alternative to owning a place is renting, and usually what you want to do is invest that money and use compound interest to build your wealth. And let's take a look at that exact same numbers that we had for the house. So we're comparing apples to apples here. Again, we had about $50,000 for the actual down payment for the mortgage, right? And then we're gonna have this grow in 30 years. Then our monthly payment is going to be, I'm going to take that exact amount straight off here from our house calculations, and then I'm going to put that our monthly payment is going to be that exact figure. And then we're going to assume that our investments are going to go with 7% a year with such an interest rate. So let's run the numbers and see with the $50,000 instead of a down payment if we invest them, and then every month we put in these $1,300 as a monthly investment. And if we take a look, actually after 30 years we would have accumulated over $2 million, guys. Now this is a major difference. So if we invest our $50,000 with a 7% assumed interest a year, and we do that diligently for 30 years, just like as if we're paying a mortgage, then we would potentially have $2 million. And this is where it really comes down to the decision. What is it better, to own or to rent? Qualifier number 3. Does it actually make sense to buy in the area that you live? Now, if you live in a very big city where everything is super expensive, property is also very expensive. And in my opinion, it doesn't make sense to put yourself with the burden of trying to buy those super expensive apartments or houses, whatever the case may be, because it's going to take you years and years and years to work really hard just to save up for the down payment. And then the rest of the mortgage is going to be really a financial burden for you. So if you live in the big expensive cities, I don't know, New York, London, Singapore, maybe it doesn't make sense to buy. Maybe it's better off to rent. That's at least my suggestion. Qualifier number 4, what stage of life are you in? That also can be very much the decision factor whether you should be buying or renting. So if you're somebody very young, for example, that just finished college or just landed their first job, does it actually make sense to get a mortgage and start paying off a house? Chances are, if you're very young, you may be moving for a job in the next couple of years. You may be switching jobs just as you're starting your career, because that's the normal thing people do. And not only that, but your job might be such that you're, say, a consultant and you have to travel every Monday to Thursday, and then you're practically at home only Friday, Saturday, Sunday. So does it make sense for you to own a place? I don't know. Maybe it's wiser to rent and then buy it later on in life. Maybe when you get married and you have kids, and when you're absolutely sure that this area that you live in is the area where you want to live for at least the next 10, 15, 20 years. All right, qualifier number 5 that's going to help us address the dilemma of whether we should be buying or renting. And that is answering the question, why do we want to buy a place? Why do we want to have our own house? Is it because you simply want to have a roof over your head? Or because you want to have your own place so you can decorate it any way you like? That's a valid reason. Or because you want to have a big backyard where the kids and the dog can run around and that's yours? Those are all good reasons, and I'm all for that. But what I want to focus, because this is a financial channel, I want to focus on the financial aspect and the financial reasons why people want to buy a home. And the most frequently mentioned reason is that buying a home is a good investment. And I want to dive a little bit deeper into that. Financial experts disagree whether the home is a good investment. They say if you've got a mortgage on the house, if you went to the bank and you took a loan and you have monthly payments, that's actually a liability for you. So unless you're renting a room of the house or the basement maybe, that's generating some cash flow for you, then technically it's a liability, and that's a valid point. Alright guys, I also promised you 3 tips about your savings, specifically money that you're putting aside with every paycheck into like a bank account that you've got. Now what I want to stress is my tip number 1 is putting the money into a savings account or a certificate of deposit is a good thing, but be aware that that money gets eaten away by inflation. So on average, inflation is 2 to 3% a year. So if you're making less than that, you're actually losing money. So there are some cases and during certain periods of time where CDs can be up to 2–2.5%. In this case, you may be able to keep with inflation, but most of the time you're actually losing money. So what you want to be doing is you want to put your money to work for you. And the way you do that is, my tip number 2 is start investing in the stock market. So by investing in the stock market, you're able to on average do maybe 6 or 7% if you're conservative and that's a yearly rate of return. And in this case, you can slowly grow your wealth by using compound interest. The power of compound interest and the time that you've got, especially if you're young, that's probably the best thing you can do with your money. Now, if you're saving up for a down payment for a house, that's my tip number 3. Don't put it on the market, because if you put it on the market, there's a great chance that you're going to lose that money, especially if you're intending to buy a house, let's say in the next year or 2 or maybe 3 years. That's too short of a time horizon to be betting on the stock market. So if you want to invest in the stock market, consider keeping the money there for at least 5 years, if not longer. I hope you guys enjoyed the video. I hope you found it useful. If you did, please share it with your friends. Hit the like button because that helps with the YouTube algorithm. And if you've got any reaction or commentary to the things that I talked about today, please leave it down in the comments. If you're somebody maybe that's just about to buy a place and you found some of the principles that I laid out useful, then I would love to know about it. Or on the other hand, if you've bought a house some time ago and your view differs from the things that I laid out, also share that. I would love to hear your perspective and your words of wisdom. So I would love to continue the discussion in the comments, and until next time, peace.